Well, hey there, everybody. In this video, I'm going to talk about the three things I wish I had known before I started trading. Huh. Whew, it would have saved me so much hassle and so much headache if I had just known these three things. I want to share them with you. Go ahead and watch the video. And at the end of the video, you hang out with me all the way through. I'm going to show you how to use the one stock to make profits every single day using less than $100. All right, let's get into the video. Three things that I wish I had known before I started trading. Because there's some stuff I found along the way, some things I learned along the way that, shoot, if I had known ahead of time, I might have done something a little bit different. I don't believe I would have stopped trading. I still would have gone down this rabbit hole called options trading, but I probably would have done some things a little bit different on the front side. My first thing that I wish I had been told at the beginning, the role my psychologicals would play. I learned very quick that your own views of money are going to come into play. And these aren't views of money that you may have gotten, that you may have found for yourself. These may be views about money that were implanted in you, or something that you learned when you were younger, or you saw things when you were growing up, heard things, just the whole viewpoint on money that for most situations was implanted in us along the way. You may not have had any control of it, but that your view of money, your money mindset, your money viewpoint mattered. The viewpoint of, is my fear of missing out on something going to make me go into trades that I am not ready to be a part of? So FOMO, as they call it, it's called FOMO now, fear of missing out. Was your FOMO kicking in? That's a psychological thing. What about greed? Big one. Greed. You're thinking my trade is going good. Let me wait. I'm kind of good. $5 more off this. But greed would play a role. These are your psychologicals. What are your psychologicals? And how I didn't know the impact of the psychology of trading, the impact of what that would do to me. What I wasn't aware of was the impact of losses. What losing money how that would affect me, how that would impact me. That's another thing that I was not aware of, that on the front side. I didn't have a clue that when you're in a situation where you've lost a little money or a lot of money, how does that affect you? How does that affect your psyche? How does that affect your mood? How does that affect you moving forward with trading as a long-term gig? I wasn't aware of that. So that was the first thing. That was the first thing I wasn't aware of, was the role that my psychologicals, or the role that trading would have on my psychology. Right? I wasn't aware. And I don't know if anybody had even would have shared it, if I really would have felt the full impact of it, even if somebody had talked to me about it. I would have been like, oh, that ain't me. I would have dismissed some stuff just because I would have felt like it wasn't about me. Come to find out that, greed and FOMO and the psychology of losing money and how you view money, what your money mindset is, those are big things in trading. It's probably the biggest thing. You have seen it said before that, like, trading is 75% psychological and 25% strategy. It's not, the majority of the trading game has to do with your mentals. It doesn't have to do with your strategy that you use, because there's strategies to use from here till Jesus returns, right? There's strategies to use for all of that. So it's not the thing that the strategy that you're using is not the biggest piece. It's just, how are you going to impact? How are you going to, receive this along the way? I wish I had known earlier in life how profitable it could have been too, because there's things I spent time, energy, and money on that I could have put my energy, my mental energy, my learning, my education, I could have put those things into the stock market. But because it wasn't something that was introduced to me or in my community, then I wouldn't know nothing about it. I've said this before, I've worked in corporate America my entire adult life. I graduated from college in 1992 as an engineer, and I went into corporate America. I've been one of the only, I was in almost every organization I worked in. I was one of the few blacks as an engineer in that organization. And more times than I can count, I was the only woman. Definitely the only black woman. If there was another black person or African-American person, they were a male, because engineering is a male dominated, well, it was a male dominated field. All the jobs and careers I had were, in male dominated organizations. I'm the only black person and sometimes the only woman, sometimes the only of each. They got me tick off 2 boxes, but as many times as I was at all the dinners I was at, every function I was at, every lunch we sat around, every time we was on a company trip, everything. I don't remember not one time where somebody was talking about stocks in my presence. I don't remember not once. And you could say, well, maybe it's been talked about and you just missed it. It could have been, but I know if somebody was talking about stock market and making money in a situation where we all were making money and making good money, and there was a way to grow that money. Now, we all knew about 401ks and we always talked about that, but nobody really talked about growing money outside of your 401k. We knew about that. Even in the 401k, nobody really talked about which stocks to get. It just was, which things to pick inside of your 401k. Did you want high growth or low growth or passive? That's the thing. Everybody said, put your money in your 401k. And depending on who you talk to, they said, don't do that. Depending on what color the person was you were talking to, they were saying, don't put your money in your 401k. Keep it for yourself. That means you bringing home less money. Well, that means the money's growing. The money's growing. Either way, all I'm saying is, I don't remember us having any conversations about stock markets back when I was younger and in my younger career days. I don't remember that being a topic. So I wish I had known earlier. That's the first thing. I didn't realize the role that the psychology of trading was going to play for me. I didn't realize that. The second thing I didn't realize was the cost of this education. I didn't realize the cost of this education, because trading stocks is an education. I didn't realize the cost of it. And I say this, and I think back now, or I've thought back more recently. I have a friend of mine. What made me even start getting the stock market is a friend of mine who I worked with in corporate America before I left to go be a teacher. Still a really good friend of mine. He's a white guy. He and I were really close when we worked at the Space Center. And even beyond that, we just developed a really strong friendship. And when I came back from traveling overseas, excuse me, him and his wife, we were meeting for lunch, and him and his wife wanted to show me, this new thing he had. So we're walking by and we're strolling, and we're passing by these cars parked on the street. And his wife says, well, you didn't tell our listeners, about your new toy. And I was like, what? He goes, yeah, that's it over there. And he points at a Porsche. Now, it wasn't a new Porsche, but he had been driving a Kia Soul up to that point. Him and his wife were driving a Kia Soul. And he bought this Porsche. And he said, yeah, I bought that Porsche. I bought it cash money. And I was like, what? We worked as an engineer. He made good money. So I wasn't super shocked, but I know, they owned a house and stuff like that. So I was like, oh, you bought a Porsche cash? What did you do? So he said, well, a couple years before that, he says, well, I decided I was going to either go back to college and get another master's degree, or I was going to learn how to trade the stock market. And so he said, and I decided to put the time on trading and learning to trade the stock market. So he said, I basically treated it like an education. And he said that he went basically to TD Ameritrade and followed their educational plan, learned all about options, just really made it a true, like he was getting a master's degree in trading stock. And even though he was talking about it like that, and he's a really smart guy, I kept thinking when he was saying it, does it really require that much education? For you to treat it like it's a brand new, but it took me getting into it. Well, actually, before I go there, after that, I was like, well, shoot, he ain't no smarter than me. I can go learn how to trade stocks too. He ain't definitely, we're in equally intelligent level. He's not any smarter than I can go teach myself too. So I went and started learning as well. It's going to cost you time and money. It's going to cost not one or. You're going to pay both of those. You're going to pay time and money. Okay, those are the two things you're going to pay for this education right here. And you're going to probably pay with some blood, sweat, and tears. If anybody besides me had some tears, like, are you serious right now? Yeah. So you go through the cost of this education. There's a cost of this education because it does cost you. This right here is going to cost you something, right? It's going to cost you some sleepless night or two. It's going to cost you some stuff. It's going to definitely cost you. But this education is going to cost you. I didn't realize the cost of the education, the cost of this education. It's going to cost you something, time, money, some sleepless nights, some time when you're frustrated. It's going to cost you some stuff. For sure, there is a cost. And the third thing is the impact that guidance would have on my trading. Anybody who's on my email list may have gotten my email from this morning where I talked about, it should have come, I think it might have come last night, but you should have seen the email where I talked about, I had a coach. Really, he was a great guy. He was very, very helpful. And what he would do was, as I was learning things, I would ask questions. He would respond to my questions, and then he would point me to a YouTube video. So he would point me to a video here, point me to a video there, but it was kind of disjointed. It was disjointed. It wasn't his fault. Please don't get me wrong. I'm not blaming the person because he didn't sign up to be my mentor. I made him my mentor. I just started asking him questions and he responded. So I continued to ask him questions and he continued responding. So he became my unofficial mentor. And whether he wanted to be the mentor or not, I don't really know. But he kept answering my questions. And he would point me to YouTube videos, which I appreciated that he would point me to those YouTube videos. But it made my education be disjointed. Made my education be a little disjointed. So I learned things along the way as I needed them, but things weren't in order. And at some point, I did decide to get into a formal program to start to learn the things that I didn't already know. And that because I really realize now, really, you got to be introspective. And I realized enough to know that my mode of learning is systematic. I need things to go boom, 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 boom. I don't just want to be jumped into the middle. I need to see what was before this and kind of, can we get an order to this? That's just me. That's the engineer in me that wants things to be step by step, right? So the way I was initially learning was a little disjointed. And then I went on to do a program that was a lot more systematic, right? By that time, but by the time I got to that, I had like a disjointed level of information. And I was now kind of mixing two things. I had learned initially to be a seller of options. That's what I initially was learning because I liked that from the beginning. Then I went over and started talking about buying stuff, buying this, buying options or whatever. And then I had to learn and unlearn some stuff and lose some money along the way, to be honest. I had to lose some money along the way. And then I decided, let me go on back to where I'm comfortable, which is selling. And I went right on back to selling but I lost some money along the way as I was doing that. Yes, I did. So the impact of guidance, though, I heard a statement that said, if you want to go fast, go by yourself. But if you want to go far, go with a partner or go with a team, go with others, right? We now because coaching has become a much bigger thing now than I think it was, never really like formalized and talked about as much as it's talked about now, the whole coaching concept, because there's a coach now for literally everything. So I think it's a good thing. Some people need guidance in all these areas. I'm definitely not knocking coaching, seeing that I'm a coach, right? But I feel like when you have somebody who can guide you around the pitfalls, you got a better chance of being successful in a quicker way. Right? Most people could figure out, you really could. Some of the strategies that we use are pretty straightforward strategies. You could do some YouTube videos and probably piece it all together, but what you're not getting there is speed. You're not getting speed. And I promise you, if you're finding stuff only from a YouTube video, the person who's on the other end of that YouTube camera isn't answering one-on-one questions. They're not doing it. They may comment back to something you put inside of in the YouTube comments, but they're not answering you back trade by trade, right? So that's what a person who's a signed up coach, somebody who really has signed up to coach you and to help you, they're going to be there for you for the support that you need. That's what that person is actually going to do. So it's just going to help you arrive to your goal a little faster. Will you have to pay a little bit for that person? Absolutely, because nobody's giving their time away for free. I did it for a long time. And then I look back at myself like, are you stupid? But in the midst of the time that I was doing that, I was also learning. I look back because the Lord doesn't waste anything. God doesn't waste anything. So any time that we spend doing whatever, right, it's not wasted. So I don't see the time as wasted at all. I was learning along the way too. I was learning more about me. I was learning about me as a trader. I was learning about me as a coach. I was learning about me as a person. All those things. I was getting my own money mindsets established because they were off base as well. You know, we come from households and backgrounds where stuff is a little skewed. I needed to clear some of those things out of my own mind as well, right? But I'm saying all this stuff to say that you need guidance. We all need guidance and coaching, somebody who's going to help direct us around the pitfalls, help us to avoid some of the things that you could run into these holes on your own, but who you don't need to find out from experience if you can find out from somebody telling you. Some people don't learn from being told. They learn from the experience. But if there's some stuff you can not have to go through in order to learn it, then how about, because you don't have to lose a bunch of money to learn that if you do this, that, or the other, you're going to lose a lot of money. How about somebody just tells you that and you avoid it? Somebody says, well, if you get into SPX too early in the morning without a plan, that's a recipe for disaster. Well, you got to have somebody with a strategy that says, if you're going to get in that time of morning, you need to have a way to lock in your profits or lock in your losses. If it don't go your way, you need to have a plan. And that's what a coach helps you do. That's what a coach helps you do, right? Learn from somebody who's going to teach you, who's going to be patient with you, who's going to break it down in a way that's easy to understand, who's going to know the struggle. I'm an educator. I've been educating people in math and difficult concepts for, 15, 16 years. I've been educating people of all ages for a long time. And I do know that there are some concepts that people have to be repeated a few times and they get it. Some people catch it quicker than others. Again, I've been an educator for a long time. I know all about that. All righty. If y'all want to hang out, this is about the time of day that we can see about an XSP trade. XSP, let's look here on the single chart. If you haven't, like I said, go ahead and like and subscribe to the channel. Subscribe to the channel so that way you don't miss anything along the way on YouTube. Go ahead and find us over there. You can find me on all the platforms at Educator to Trader. You're welcome to join our Facebook group if you'd like, Educator to Trader. We're hanging out in there. I also have a membership where every morning we have a pre-market call. We trade together during the day, as far as we have an exclusive Telegram. We do a virtual power hour at 3:30. Every other Saturday, we do coaching on strategies and just working out things. And in our exclusive Telegram, we just really support each other in trading. We support each other in our trades. And everybody needs community, right? We're going further together. All right. Let's look at the deltas. Look at the probability out of the money. I don't know if y'all added this to your option chain, but if you didn't, you need to probability OTM, which means the probability of being out of the money. I don't know if the other brokers have it. I do know that Thinkorswim have it because Thinkorswim is what we use. Okay. On the bottom side, 455 has a 78% probability out of the money. That's good. I like to stay 75% or above. Works for me. If you want to go a little further, you can go to 454. Don't know what kind of money is going to be there, but you can look. We can look there. 455 on the put side, sell leg 78%, and looks like on the call side, prices are going up. This is why this 456 is showing a 59% out of the money, which means there's a 40% chance it's going to be in the money. In the money, which is not what you want when you're a seller. You don't want to be in the money. You want to be out of the money. So 457 is an 89% probability. So we got what? 455 and 457. Let's switch over to the vertical, right? 455 is paying 7 cents. at this point, $7. $7 is being paid in premiums. You're leveraging the other $93. That's your collateral you're leveraging. We can put the 8 cent. Oh, it's 9 cents now. Very good. XSP, you're going to collect $9 in credits, and you're leveraging $91 of collateral. That's a vertical spread on the put credit spread side, 454, 455. And you need price to stay above 455 for this trade to be a good one. Price has to close above 455. Now let's look at 457. Oh, we had 457. There is no money or very little money at 457. 457 call credit spread. What you can do here, if you really like this stock, now keep in mind, you're going to spend $1 and some change, $1.30, you're going to spend on fees. So you don't want to, if it's only collecting $3 and you're going to pay $1, less than $1.50 on fees, you keep it $1.50. It ain't necessarily worth it. So what you can do is take this credit up higher to something that you do like better, and you just put in the order and it sits there until it picks up. If it doesn't pick up, it just doesn't pick up. If it does pick up, then great, right? But you're combining this $6 with the other $9 that you got. When you combine those together, you're making $15, $16, right? You're $15 because I put a 6 in there. You're making $15 off of your $100 of collateral. In the market, we got an hour and a half left, right? You only have an hour and a half left. That the other side didn't pick up. The field side, we took in $9 on the put credit spread side. The call credit spread side, price must be going back down. The call credit spread side is, I have a $6 that I'd like to get, but it's only worth $1.50. That means price is going away from the call side. Price is going away from it. That's why it's dropping down. So you've got your put credit spread from the first trade we did, the 455, 454. What you do there, if you're going to get just on the one side, if you want more money, more income coming in, you do more contracts. For every, you add more contracts, you're also adding on more collateral. You have to keep that in mind. Adding more contracts means you're adding on more collateral. Again, please, if you haven't already, go ahead and subscribe to the channel. It helps us to grow, helps us to pass the word. The whole objective here is that we help as many people as possible become stock traders. We're trying to grow. We're trying to tell as many people as possible about the stock market and the benefit and the growth and what we can get out of the stock market. Okay. All righty. It's been wonderful hanging out with you all. In this community, we do two things. Bye, 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 bye. We do two things, baby. We stay green and we get this money. All right. I'll see y'all later. Bye.